All right, class number 2. This one, I'm going to show you guys how we make money trading Forex and how we use a broker and a dealer and things like that. So now that we've got a little bit of knowledge on about Forex and what it is, let's talk about how we trade it and how we make money. So first off, there's a first thing that I need to explain to you guys is that there are 3 parties to a trade. Number 1 is the retail trader. That's you and I. So we're what's called a retail trader. And then the second party to the transaction or to a trade is the broker. That's the guy that serves as our agent. Now I'm going to show you one here in just a few minutes, but there are literally hundreds of these to choose from. And as a company, we don't necessarily promote a specific broker. But the nice thing is there's lots and lots and lots to choose from, literally hundreds to choose from globally. So whether you're in the United States or somewhere around the world, there's always a broker to pick right in your backyard. Now, the third party to the transaction, to the trade, is what's called the dealer. They serve as the principal on the transaction. Now, in our case, that's MT4. And again, I'm going to show you MT4 here in just a minute. So, 3 parties: the retail trader, you and I; the broker, that's the guy that serves as our agent on the transaction; and the dealer, they serve as the principal. All right. Let's talk about a few definitions here. We really need to understand a couple things on how Forex works and how we make money, right? Number 1 is, what is a pip? Well, you're going to hear that thrown around quite a bit. Pip is what we look for every single day. That's how we make money, right? It's an acronym, and it stands for percentage in point, right? Percentage in point equals a pip. Now, a pip is equal to 1/100th of 1%. And it can vary depending on the currency or the instrument that we're trading. Now, in this class number 2 today, I'm going to show you a bunch of different examples, so it'll become clear here in a minute. But pips are very important to us as currency traders. It's how we get paid, how we make money. And it's also how we lose money. So again, pips, just keep in mind, it's 1/100th of 1%. So let me give you some examples. Let's look at the euro dollar. So the euro dollar, the exchange rate right now, again, remember what I told you yesterday about the base pair versus the quoted pair. So the USD is the quoted pair here. So the quoted pair is what you pay for the base pair, right? Per 1 unit. So the exchange rate is $1.10, but it also goes out to the thousandth of a penny. So when we're trading Forex, it goes $1.10, 458. So that's how far out the euro dollar goes. So the $1.10, the 0 is the penny, the 4 is 1/10 of a penny, the 5 is 100th of a penny, and the 8 is 1,000th of a penny. Now we call that 8, that's called a point. We don't trade in points, we trade in pips. So the 5 is what we're looking for. That's the pip. It's 100th of a penny. Or like I said, remember, it's 100th of 1%. Okay? Now, it's not always the exact same. So this is a dollar quoted pair. So anytime it's a dollar quoted pair, it'll look similar to that. But not always. Let me give you another example. So look at gold. So now if you went to buy an ounce of gold, this is what you'd pay for it. It's $1,503, and it goes out to 0.04. So to the penny this time, right? So the pip, when we're looking at gold, is, so a 1 pip move on gold would be from 1503.04 to 1503.14. So it's not always out to the 100th and even the 1,000th of a penny, but keep in mind, it's always 100th of 1%. That's what we need to focus our attention on, is we're a percentage in point. Again, that's what a pip stands for. So let me give you another example. So dollar yen. Dollar yen is one of the most widely traded pairs in the world. So the dollar yen current rate is, no, look at this one. So USD is the base pair. The yen is the quoted pair. So the yen is 108 yen, and then it goes 108.173 or 17.3, 108.17.3. So that 7 right there is the pip as far as we're concerned on the yen. So if it goes from 108.17.3 to 118.3, that's a 1 pip move. Okay, getting more and more simple, right? So US 30, that's the Dow Jones. We always love to trade the Dow Jones. So if it goes, so right now the Dow Jones is sitting at 27,064. If it goes 27,065, that's a 1 pip movement for us. Okay, so it's not always, if you look back up there on euro dollar, it's not always out to the 100th of a penny. But the euro dollar is the most widely traded pair in the world. But that's just a good example, good one to look at, good one to keep an eye on. All right, so that will become more and more second nature for you, much easier to follow and understand as you trade. But keep in mind, the pip is easy to find, and we'll show you when we're using MT4, which is the dealer in our transactions. They make it even easier for us to spot where the pip is. But again, we're looking for those very small movements. You know, again, a 1 penny movement is 100 pips for you and I. That's a huge movement, right? So just to give you an example, if that went from 110.45.8 to 111.45.8, that's a 100 pip movement. That's a very big movement on euro dollar. But again, that will all become second nature for you as you spend more time with us. All right, next definition that we need to be aware of is, what is a lot? Now, a lot is what we essentially trade. Okay, the lot is essentially, this is the easiest way to understand what a lot is. Now, I'm going to give you a lot of info here in a second, but it's essentially how much of your account you want to leverage on a trade. Let me say that one more time. It's essentially, the lot is essentially how much of your account you want to leverage on a trade. So a standard one lot trade equals 100,000 units of the base currency. So a 1 pip movement on a 1 pip movement on Euro USD, that would be 100,000 units on a 1 lot trade would equal $10 per pip. So for every 1 pip, which is a hundredth of a penny, would equal $10 per pip. And what you're doing on that 1 lot trade is you're leveraging 100,000 units of the base currency. Again, we're talking very small movements, so we need to leverage more of that base currency. So let me give you a little more information, okay? Now, you need to understand this. Not all trades are equal. Okay, even though you're leveraging $100,000 on each trade, or 100,000 units on each trade, if you're trading a USD quoted trade where the dollar is the quoted pair, it's always worth $10 per pip movement on a 1 lot trade, right? So a 1 lot trade, 1 pip equals $10. So if it goes 10 pips, or 1/10 of a penny move, that would be $100. If it goes 1 penny, that would be $1,000 profit for us as Forex traders. So let me give you some examples. I want to hop on my screen here, and I'm going to show you through MT4 what some of these trades look like, because it's important that you understand what I'm talking about here when we're talking about trades, and that all trades are not equal. Now, this right here, guys, is MT4. And I'm going to do an entire training, several trainings probably on MT4, how to use it and set it up, etc. But I just want to show you a couple things. Let me give you some examples. So right here we're looking at euro dollar, okay? Now let's look at a one lot trade on euro dollar. Now I don't care necessarily which direction it's going to go, but I just want to give you some examples. So if I put in a one lot trade, now I'm going to go short or I'm going to do a sale, and let's just put in a one lot trade. Okay, if you notice right down here, I just put me in a sale on a one lot trade, and so the trade is active and running. Now what I want to do is I'm going to drag this down to where it's right at 10 pips take profit, because I want to show you the difference. I tell people all the time that all currency pairs are not created equal, because some currency pairs are more valuable for us to trade based off of that leverage, based off of the one lot trade that we're trading. All right, so let's take a look at this. Let me make sure I'm at exactly. So that's the price I got in right there. $1.10.71.5, and I'm at $1.10.61.6. So let me move that down just a hair, so it's exactly 10 pips. Okay, so if you look right there, that's the price I got in, and that's my take profit. That's exactly 10 pips. So if I take my mouse and put it up here, you'll be able to see right there. See my my pips. It says 100, but move your decimal over one spot. That's 10 pips. I will make exactly $100 if that drops down there and takes that trade, if it's a successful trade. So if it's a dollar quoted trade, it's always going to be $10 per pip, or in this case, let me show you one more time, $100 for a 10 pip movement, or a tenth of a penny movement. Okay, now let me show you as an example dollar yen, because I don't want you to think all these are exactly equal, because they're not. So if I go up here and do a one lot trade and I put in a sale, and again I'm going to do them all exactly the same so you can see the difference, right? Okay, so this one, you see the dollar yen right there. I got in at 108 yen, 108.13.2. and my take profit is 108.032. So that's exactly 10 pips. Now look at how much I make off of this trade if it goes 10 pips. So it's still 10 pip movement, but I make $92.47. So I don't make $10 per pip or $100 for a 10 pip movement on this one. So again, I'm trying to make sure you understand that all trades are not equal, because if it's a dollar quoted pair, it's always going to be more valuable. Let me show you two more. This one right here is dollar CAD. This is the USD versus the Canadian dollar. Let's put in a sale. Let's just keep them all sales, right? Just so they're all identical. So let me drag this down to 10 pips. Get as close to 10 pips as I can. That's actually off 1 pip, so hang on 1 second. Let me make sure it's exactly 10 pips. All right, now dollar CAD is very interesting. Look at this. So on the euro dollar, I made $10 per pip, or $100 on that total move. If I'm in dollar yen, I'm about, what we say, 90 something dollars, right? Look what I am on dollar CAD. So for the exact same trade, going exact same distance, I only make $75.52. Now what's the difference between euro dollar and dollar CAD? Well, the difference is euro dollar, the USD is the quoted pair. On the dollar CAD, the dollar's the base pair. So for the exact same movement, I make only about 75% on a CAD trade, going the exact same number of pips. So that's why I want you to understand that not all trades are equal, even though you're trading 100,000 units of that base currency. Let me show you one more. This is a pair that I really like to trade. This is pound Swiss. Let's put in a 10 lot trade on this one. Drag it down, get it as close as I can. So on that pound Swiss right there, I got in at $1.2412 for. Let me make sure I'm getting out at exactly 10 pips. There you go. So I'll get out at $1.24024. That's exactly 10 pips. Now look how much I make on this one. This one's kind of interesting. I make ever so slightly more than $100 on that trade. So again, here's what I want you to take from this training. Not all currency pairs are exactly the same, but what we're really trading is we're looking for pips, which is 1/100th of 1% movement. That's what we're looking for. But just keep in mind, not all currency pairs are equal. If it's a dollar quoted pair, it's typically going to be a much better trade for you. Okay, now I want to show you this. Let me go to, let me close these just so they're not distracting you, because I want to show you that you can also trade in fractional lot sizes. So if you look up there, I've been trading in one lot trades, right? That's what I was putting in. But let's say you wanted to do a fractional lot, meaning a quarter of a lot. So you could type in 0.25. Let me do it on euro dollar so it's a little easier for you to see. 0.25, right? And let's do a sale. Okay, so I'm doing a quarter of a lot. Now you can do any number you want. I don't want you to think it's got to be exactly, a quarter or anything like that. It can be any lot size you want. You can do 0.10, 0.50. You can do 1.50. You can do 10.50, right? You can do any amount you want. Let me make sure that this is exactly 10 pips so you can see it here. So I need to go to 62.8. Let me just make sure. So what I'm trying to show you is that it's exactly 10 pips, right? So I put in a quarter lot trade. So instead of making $100 on that 10 pip move, I make $25. So you remember what I told you about your lot size. Your lot is essentially how much of your account you want to leverage on a trade. So you can pick any lot size you want within reason. I'm going to give you some more information here because there's more that you need to understand on leverage. So let me go over just a couple more things here with you on this class here. So one of the things you need to understand is leverage, okay? Because you guys, we trade in such small movements, literally 1/100th of a penny movements. Our brokers give us what we call leverage on our accounts to allow us to trade more funds than we actually have in our accounts. I'm going to give you some examples here in a second though. But here's something you need to understand. Years ago, there was legislation passed here in the United States to limit the amount of leverage we can have on our accounts. In the US, it's capped at 50 times or 50-to-1 leverage. However, there are some international brokers that still allow up to 1,000 to 1 or 1,000 to 1 leverage, right? So let me give you some numbers on this. So if you were looking for a trade, right, on a 50-to-1 account, let's say you started with a $5,000 deposit into your account. Your broker, if they were a 50-to-1 leverage, would give you $250,000 to trade. Now again, they need to do that, you guys, because we're trading in 1/100th of a penny movements. So if you were only trading $5,000 on 1/100th of a penny movement, you wouldn't be able to make very much money. So that's why they give us 50-to-1 leverage. So if you have 100-to-1 leverage on that same $5,000 account, you'd have $500,000 to trade. If you had 200-to-1 leverage, you can do the math, right? You'd have $1 million to trade. And then some of these international brokers, they give you 1,000-to-1, you'd have $5 million to trade. So this is why brokers advertise higher leverage amounts, because it gives you more freedom to trade. So you guys, leverage is very important because it governs how much of your account you can leverage on trades, right? So if you have a higher leverage account, you can obviously trade more off of the same amount of funds. So remember, a one lot trade equals 100,000 units of the base currency or $100,000 on your account. So like it says right there, right? If you have $250,000, if you're doing a one lot trade, you would only have what, 150 left on a 50 to 1 account. That makes sense, right? But if you've got a, let's say, a 200 to 1 and it's $100,000 of currency out of your account, you would still have 900,000 you could trade. So that's why leverage is so important and so valuable. But we are a little bit limited here in the United States. All right, let me give you some examples, okay? Let's come back over here to MT4, and I want to give you some examples. So what I've done is I've come up here, and you can see over here in the top right, I have two different accounts right here. I've got a leverage of 300 to 1 and leverage of 50 to 1. So let me put in something. I want to show you guys really quick the difference between these two accounts, because what happens is there's one more piece that you need to understand about leverage. So the lower the leverage amount you receive from your broker, the more your broker will require as a deposit to trade. So they want to take a portion of your account and hold it as a deposit every time you place a trade. So this is also very important because it also determines how many lots you can trade. So remember, when you're looking at the lot, it's essentially how much of your account you want to leverage on your trade, right? Well, if the broker has limited your leverage, they're limiting how many lots you can trade. So let me give you an example. So this one right here is a 50 to 1, very similar to what we have here in the United States. So if you look down here at the bottom, the balance is $10,000, the equity is $10,000, the free margin is $10,000. So I haven't used this account at all. But I want to show you what happens when I put in several trades. So let's just leave it here on euro dollar, and let's put in a one lot trade, okay? So let's just do a sale. Well, look at what happened. So here's the important part, right? So there's my balance. There's my equity. That's what my account is as of right now, right? And then there's the margin right next to it, and then the free margin. So what the broker did is they took about $2,200 of my account and held it as a deposit on the trade. So it limits how many trades I could put in, right? So let's try and put in another one lot trade. Okay, allow me to put another trade in, but look at my margin now. It's all the way down to 4,429. So I still have, now here's the interesting part, right? I still have a balance of $10,000. And I have equity of 9,974. So almost my entire account still left. But let's see if I can keep putting in trades. All right, I can put in one more and one more. Let me move this up just so you can see, right? So my free margin, so my margin is getting pretty low. My free margin is almost gone. Let's try and, so I've got 4 lots in. Now, one more time. I've got $10,000 balance. My equity, so my account right now is $9,967. It shouldn't let me put in another trade, wouldn't you think? No. So as I try and put in that trade, it won't let me. It's stopping me. So what's going on is the most I can put in on a $10,000 account with this 50 to 1 leverage is 4 lots, even though I still have almost all my equity. What's going on is the broker is trying to protect me from, one, putting in too much leverage on my account. So it's protecting them and me. Okay, so it's a safety feature. All right, so keep that in mind. Let me show you just the other account, right? That's got 300 to 1. Watch how many lots I could put in on this one. So I can only put in 4 with 50 to 1 leverage. Again, here's why. Because the broker's taking a deposit every time I put in a trade. So I'm going to be able to put in more than 4. So let me drag this up so you can kind of see them all. So let's just put them in. See how much it's taking now? Look at that. It took $369 in margin. What was the other one taking, the 50 to 1? It was over like $2,200 each time. This one's only taking $369. Look at that. So I'm going to just put a bunch in, right? It'll keep going. I mean, how many do I have in there? Let's count them. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 trades. And I could still put in more. So that's the difference, right? So when your broker says, well, what leverage do you want? If your broker gives you greater leverage than 50 to 1, I'd recommend you take it. Not so much that you could put in all these trades. That's not the purpose of it. But it allows you to have the freedom to trade more. So there's still a bunch more on this account that you could keep trading, but it didn't take as much as a deposit each time to secure for the broker's interest as well as my interest. Okay, so one more time, that feature is simply a benefit that the broker provides to protect them and me, to keep me from leveraging too much on my account. Now again, I've got future trainings that I'll go through MT4 with you, this platform, which is the dealer platform, right? And I'll explain all this in great detail, but I want you to understand that leverage is vitally important when it comes to trading Forex. Okay, so another thing to make you aware of for American brokers is we have what's called the first in, first out rule, or the FIFO rule. Okay, so if you're trading, as an example, the Euro USD, okay, you can place multiple trades on that same pair. However, in the United States, you will be required to close them in the order you placed them, i.e. the first in, first out. So as an example, let's say you put in 3 trades. So you'll have to close the first trade first. You cannot close the third trade, as an example, and leave the other trades running. So this can be a little bit of an obstacle for us here in the United States, but it's manageable. But I just want you to understand that if you pick a stateside broker and you use a stateside broker, you're going to be limited slightly. International brokers at this point don't have that rule, but you guys be aware that that appears to be on the horizon and coming for everybody. All right, just a couple more things to tell you in this training here is account sizes. So your account can be from literally a few dollars. I've seen people trade $5 accounts, right, up to millions of dollars. So there's really no limit. I've got members and clients and people I've traded with that literally trade tens and hundreds of millions of dollars in this industry. It's the biggest industry in the world, you guys, so there's no limit on how much you can trade. So when you guys get really good, just imagine trading a seven-figure dollar account. That'd be amazing, right? But there's no limit on the size of the account, because again, you can trade micro and mini lot sizes. You don't have to trade 1 lots at a time. All right, let me just tell you this, guys. So there's no limit on your lot sizes, or no limit on your account sizes either, right? However, Forex is very unforgiving and can be very risky, so be very careful, okay? Don't over leverage your account. In some of the future trainings we'll do with you, I'll show you what you should do, let's say on a $5,000 account or a $10,000 account. You don't want to over leverage your account regardless of what your broker gives you. So take your time. Learn this industry first. It's the greatest industry in the world. It's amazing. But be careful, guys. You can lose your entire account. So we'll get better and better at this. We'll give you better and better tools and teach you more and more as we go. All right, next video, we're going to show you how to open an account and also talk to you about when the market moves around the world and when some of the best times to trade are. All right, so with that, I'll talk to you guys on the next class.